Assalamualaikum and hello everyone. Let's get back to my session. This is Financial Plan Part 2 with me, Hariyaty, or you can also call me Katie. Please stay focused. And our learning objective for this time is to identify the items in a financial plan and some tips for you to prepare a simple financial plan for a burger kiosk at your campus. So let's get started. Let's say you wanted to run a small business kiosk at your campus. So how are you going to go about doing it financially? So here, I will tell you how you go about planning simple financial aspects for a burger kiosk in your campus. The burger looks scrumptious, right? And the burger stall looks so neat and sturdy, ready to welcome all burger lovers on campus. Yay, let's plan to have one. Here is the basic financial plan terms that you need to know, and some of it are not jargons for you because I had explained some of it in the first part before this. So, the first one is the project implementation cost. The second, sources of funds for the project. The third, financial schedule for asset depreciation and non-amortization. The fourth, cash flow projection. The fifth, income statement projection for profit and loss determination. And the last one, balance sheet projection. The first, project implementation costs. After you have calculated the assets, the operating cost, and determined the break-even point, you will know how much capital is needed to start the business. I will explain the break-even point with next slides. Look at this slide. The project implementation cost, this is just an example for a burger kiosk, is as follows. First one, the assets or equipment needed for you to operate the burger kiosk. Let's say you have to buy the burger kiosk for RM1,500 ringgit, and you have to pay for the working capital for 1 week. Let's say the salary, the raw materials needed to sell the burgers. So the salary or wages, let's say you have to pay like 100 ringgit for 5 days. So in total you have 500 ringgit as the cost you need to finance the salary and wages. Raw materials needed, let's say you have to pay for RM150 ringgit for 5 days. So you will have to pay 750 ringgit. The marketing purpose to create the pamphlets and the brochures. Let's say it is roughly about 500 ringgit. So in total, we have for the implementation cost for RM3,250 ringgit. So this figure is the project implementation cost that you need to pay. You need to have the money, the sufficient money to pay for the implementation cost. And then, how you're going to finance the cost? You need sufficient sources of funds. You have to determine the project implementation cost first, and then you need to have the sufficient amount of funds to finance the project. Sources of funds can be from your own saving, from the loan that you obtain from your family members, your friends, or any formal loan you obtain from any financial institutions or banks. So you need to have a clear sources of funds that you will use to finance the project. For example, let's say you want to finance the burger kiosk project, so you need to have the implementation cost as follows. The amount just now is RM3,250. So let's say you make a small loan amounted RM1,000 ringgit under a short-term financing, which is a month duration of the payback period. So the loan offers you weekly interest about 10%, which is around 10 ringgit per week. So you have to pay the principal amount every week, which is around 250 for the whole 4 weeks, so that you can pay back the RM1000 loan in 4 weeks time. So the loan interest amount per month is RM40. So here you need to come up with a table of project implementation costs and sources of funds schedule. This project implementation here portrays the project implementation cost and sources of funds needed to finance the project. So here the total amount of project implementation cost is 3250, and this 3250 will be financed by the owner's own money, which is 2250, and the remaining balance of RM1K will be financed by the loan that has been made by the owner. Okay, here the implementation cost consists of assets 1.5K, registration or others 100 ringgit, salary and wages 500 ringgit, raw materials 750, and marketing cost 500. The sum we have here 3250, and this 3250 must be financed by the sources of income, sources of funds, which is from your own money or from the loan. Okay. And how you want to calculate the depreciation of the assets, maybe. In this case, in this kind of burger kiosk business, you have a burger kiosk, right? Let's say the stall equipment or the kiosk that worth RM 1,500 have nearly 2 years estimated life expectancy. So by using the straight line method, the estimated depreciation cost per week is 15 ringgit. Okay, we got this 15 ringgit amount by dividing RM 1,500 over 100 weeks. Okay, so the depreciation table will look like this. Okay, from week 1 until week 4, you have the depreciation amount weekly at RM 15 ringgit, and the amount will accumulate. Okay, from week to week until it turns to RM 60 ringgit. And then the loan amortization, payment. Yeah, you need to pay the loan because you have loan like 1,000 ringgit just now to finance your business project. So you must have loan amortization table here. So let's say the amount of loan is RM1K for 4 weeks duration with 10% interest weekly. So the first week you need to pay 250 ringgit as the principal, whereas the interest is 10 ringgit. So after deducting the 1,000 ringgit 250, you will get the loan balance 750. And then the second week, another more 250 ringgit principal you have paid. So the loan's balance is 500 ringgit. And the third week and fourth week, okay, the number is still the same, 250 by using straight line method. So you have the balance 250. So the last fourth week, okay, you have paid 250 also. So there is no more loans balance in here in the table. But interest you have paid amounted 40 ringgit. Okay, for 4 weeks. 10 plus 10 plus 10 plus 10, you have 40 ringgit for 4 weeks. Alright, then here is the cash flow projection for the first month of running the burger kiosk business. So here you have to prepare these 1, 2, 3, 4, 5, 6 columns containing items. First week activities, second week, third week, fourth week, and also the total amount. So here follows by cash inflow. All the money that gets into your business account, you need to record it. Here you have balance carry forward. Okay, but in the first week you don't have any cash carry forward. Okay, we have capital like 2250, loan 1,000, sales 1,500, and total inflow 4,750. Okay, this plus this plus this, you'll get 4,750 total inflow. And then the cash outflow, this total inflow must be deducted by the cash outflow. Okay, the cash outflow consists of assets, administrative cost, production cost, marketing cost, loan interest, loan principal, and total outflow will be the sum of all these operating costs. Okay, so you have total outflow 3610, and this amount must be deducted. Total inflow deducted by 3610, you will get cash balance for first week 1140, and this cash balance will be carried forward to the next second week. Okay, 1140 must be carried forward to the second week. So you need to put the figure in here. And then the sales, let's say 1,500, same with the first week sales, and the total inflow will be 2640. This figure plus this figure will get this figure. Okay, the total cash outflow is 1130. You have to total up all these expenses. It will be 1130, and you have to deduct total inflow with total outflow. So you will get the cash balance for second week 1130. And then this 1130 you need to carry forward to the third week 1130 here. And let's say the sales and total, the sales here is 1540. So the total inflow will be 2630. 2630 minus 1510, you will get 1120. Bring this 1120 to the fourth week. Let's carry forward. Okay, so you have here, you have to add it up with the sales amount 1500, and the total inflow will be 2620. And then you need to minus 2620 with the total outflow, which is 1510. So you will get the balance of cash for 1111. So this cash balance you need to carry forward to the next statement, which is projected income statement for the first one. So here, the sales amount must be deducted by the cost of goods, so you'll get the gross profit. The sales here is 6,000 minus cost of goods 3,000, you'll get gross profit about 3,000. So you have to deduct this 3,000 with all the administration costs, the marketing costs, the interest, and the depreciation. Alright, so after you have deducted the amount from 3,000 to all this, okay, you will get 300 as the net profit. Okay, you need to consider the operating costs, okay, because here operating costs can be defined as the cost to run the businesses on a monthly basis. In other words, the weekly or monthly expenses. And operating costs must be recorded under the cash flow in here. Okay, in here. We have administrative, production, marketing, interest, all this. We have administrative, production, marketing here. You need to determine it, and after the operating costs have been calculated, then you can determine the break-even point. Here, after you have 300 ringgit as the gross profit, if you want to determine the break-even point, you must deduct the amount here, the gross profit amount, with the total operating costs. So you will get the break-even point. Let's say here, the gross profit is 3,000 ringgit, and the administration cost is 2100, marketing cost is 500, interest is 14, depreciation is 60. So your actually this figure, all this figure amounted 2700 is the break-even value that you have to deduct with the gross profit. Okay, if the gross profit is 2700 and the administrative operating cost is 2700, then you will get the break-even point here. So guys, the last one is the balance sheet statement.